You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast. Today, I want to start out by reminding you that Wealth Formula Podcast is hosted by wealthformula.com. And if you go there on the internet, you will find all sorts of other resources to check out, including free books from me, the likes of George Newberry, etc. You'll find reports. You'll be able to sign up for things like the Accredited Investor Club, which is really where a lot of the action happens. And, of course, you can also sign up for our private community, Wealth Formula Network, there as well. And don't forget about it, because you're only getting part of the action by listening only and not taking the extra step and going there and signing up for stuff. So today I want to start out by telling you or reminding you of my personal paradox. You see, I've got this thing where the more I invest in real estate, the less I pay in taxes. And that's because of this real estate professional designation, which, some of you may qualify for. You may qualify for this, and if you do, I highly recommend it. You see, the situation that I've got is that every time I invest in real estate, effectively, a good chunk of my investment becomes deductible because of something called bonus depreciation, and the fact that I can write that bonus depreciation off against active income because of my designation. Now, it could be worse. I could not have the designation and not be able to apply passive losses to all sorts of income the way I can right now. So frankly, I can't complain. It's a good problem to have, but it is a paradox nonetheless. My situation makes me think about the profound impact of this thing that people talk about in microeconomics all the time. The idea simply is that people do what they are incentivized to do so. So, for example, the tax law in general is a series of incentives because the government wants you to do certain things. If they want you to invest in oil and gas, they will make it beneficial to you from a tax perspective. People follow these incentives, and that's all I'm doing, and it's really powerful, right? I have these profound tax advantages from investing in real estate. And because of that, it makes me hyper aware of investments and expenditures that actually don't have any tax advantages. So it's weird because it sort of magnifies all these things that sometimes you don't even think about, right? I mean, my friends who invest in the equity markets, they don't even think about the idea that investing could, reduce their tax liability. Why? Because it doesn't. Why? That's why. They never even thought about investing as a way of reducing taxes. Anyway, so this is the reason that I won't even consider investing in the equity markets, beyond the systemic risk, beyond the volatility, beyond, the minuscule gains, frankly, that you get most of the time. If I'm operating outside of my real estate happy place, as I like to call it, there better be one of a few things. There should be either a tremendous opportunity for yield. Okay, so that's my asymmetric risk stuff, like Bitcoin or whatever. There should maybe have a benefit beyond just the investment. Wealth formula banking, for example, the ability to take the money and invest in a couple places at the same time, or the fact that there's actually a death benefit for people that I love and care about. And so that makes sense too. So there's something else there that's compelling that actually gets me out of my happy place. Otherwise, it's a tough sell, frankly. Now, it's tricky because this kind of thinking doesn't necessarily get me all the things that I want, As a car guy, this has put me in a difficult spot. I love cars, especially Italian sports cars. But buying a Ferrari, for example, off the lot just makes no economic sense at all. And I am cursed with having this desire to make economic sense. It's guaranteed to depreciate, driving it off the lot no less than 50% over, the next 15 to 20 years. And maybe at that point, you get lucky and you buy something that's actually going to regain value over time. I mean, certainly I've thought about this ad nauseum. Another option I've even thought about is focusing on, say, a maximally depreciated sports car, say something 10 or 15 years old. It's depreciated. It's probably not going to go down too much more in value, but it has a possibility of going up. So that's another possibility. So at least you don't lose value. Now, listen, what I'd really like to do, though, truth be told, is something I've talked about before, which is eventually have a collection of classic cars. And I've mentioned this before, that I also almost pulled a trigger a few months back ago after I had this eye-awakening moment of a perceived near-death experience. And it sort of made me think, well, gosh, why am I not doing things that I like? I mean, and that's very true. But the problem is that when you're as dense as me, and you and these microeconomic incentives have so much power over you, it's tough to see the light. And of course, I also realized that I didn't really have the garage space to park a multiple six-figure investment at this current time. So for now, I'm still driving my Prius. However, to be clear, I still love the idea of buying things that I love and that will likely appreciate over time. And again, this goes back to a simple concept, which is nothing that you buy from IKEA will ever go up in value. So why not buy some things that are maybe more expensive now, maybe a lot more expensive now, but last forever and that you can enjoy for a lifetime and sell them at a profit someday? Totally different paradigm of living and thinking about your daily stuff. And I love that idea. Anyway, hopefully over time, I'll actually follow my own advice because I still think it's a very cool way to live. And soon enough, for me, it will be my car collection. In the meantime, I have found a super cool business that kind of lets you be an armchair quarterback, sort of the fantasy football version of, owning the classic cars. And it is a super cool business that allows you to own a fraction of your favorite classic or rare supercar and actually trade those shares via an online marketplace. I'm not talking about virtual cars. I'm talking about the actual cars, like a one of a kind Ferrari that's, back from the 60s or something like that. Anyway, it is a very cool business called Rally Road. And right now it deals primarily with these collectible cars, and it interestingly enough, functions solely as a mobile application. It is a absolutely fascinating business model, one that I think you may particularly enjoy if you like the idea of combining your hobbies with investing, or if you like to know what's going on in fintech, because this is sort of cutting edge stuff. So this week, we are going to interview one of the co-founders of Rally Road. His name is Rob Petros, and we will be back with Rob right after these messages. Welcome back to the show, everyone. Today, my guest in Wealth Formula Podcast is Rob Petros. Rob is the co-founder of rallyroad.com. That's rallyrd.com. Rally Road is an app-based exchange for buying and selling equity in assets such as ultra-rare classic cars, something near and dear to my heart. Rob, welcome to Wealth Formula Podcast.
Well, thank you so much for having me. Sincerely appreciate it. I'm glad it's near and dear to your heart as well. It makes it feel good.
Well, yeah, it's funny because we actually connected after I did a interview with a colleague of, a friend of yours, and who was into rare art. And I was like, wow, it's kind of like cars in a way, right? And then he's like, well, if you like cars, you got to meet Rob because he's doing cars. So here we are. So give us a little background on yourself. I mean, what were you doing before this venture, which we'll get into in detail a little bit later? But how did you, start out and end up where you are now?
Yeah, so My career trajectory has very much been, a lot of it's been a mix of sort of design and a little bit of finance. And those two things together, I think were the sort of the precipice for getting to where we are right now as a company. So I was in school in the 2000s, and it's an era when design was very different than it is right now. And product and websites, all that stuff was very almost archaic compared to where it is right now. So a lot of what I had was very much self-taught. So learning a little bit of code, learning a little bit of design in school. But getting out of school around 2006, 2007, when the iPhone had just come out. And in New York in particular, there were so many new companies trying to do something with the iPhone and sort of bring that experience to life. They can kind of see where the App Store was going to be and where all these third-party applications were going to be. So I wound up working at a company called Scroll Motion. I was one of their early employees, building out a big digital publishing company where we would take a bunch of existing content from big banks, companies like Citigroup and some big players in the pharmaceutical space like Genentech and Roche. And it's about bringing all their sales and training and all this material to life from what was printed material and making it interactive. So it led to a couple of stops at a bunch of big startups. I was at a company called Kimi here in New York, which is a computer vision play. Built out a bunch of internal software for hedge funds here in New York as well, who are going through this big transition between 2010 and now, where everybody kind of expects everything they're doing, whether it's finance or whether it's sort of investing or whether it's just general consumer behavior on a phone, and have it look and feel like the things they use most. So I've been a designer and building out product for all these individual instances for a long time. And things like classic cars and rare collectibles, all these things have been a part of my life for a long time. So talking with a couple of friends who are in the space about what we want to do next, and this is kind of the natural progression.
How did the idea of doing some kind of an exchange, where did that come from? Was there like a moment
that was a mix of a few things. One, and I think you know this well, and what real estate's kind of done since 2008 to now. I think a lot of people missed out on a lot of things from the bottom to where we are now in 2019. And one of those things was the idea of alternative assets. So myself, two of my close friends, my co-founders Max and Chris, who I've known for 20 and 15 years respectively. Max coming from Barclays, he was doing a bunch of private placement deals. Chris was a kind of a serial entrepreneur and somebody that I really respected in the space, who kind of knew all the ins and outs of what building a company from scratch would be. And then me from the product standpoint, having built out all these apps, we knew we wanted to work together in some capacity. We also knew that we had missed out individually ourselves on all these great investments that I think we could have gotten at a really meaningful price point with a big chunk of equity and rode it over the last 10 years. One of those spaces was classic cars, something that we all really cared about, but something that I think there was this huge delta between the haves and the have-nots. So the idea of going to an auction, seeing those prices and understanding this stuff and really caring about it, and having the sort of money and the connections to get involved, there's a massive delta there. So we knew that was a space that A, we cared about, B, was ripe for disruption, and C, was a space we had all kind of missed the boat when it comes to sort of putting your money where your mouth is and making that investment.
Yeah.
So we started talking about what this could be and where the exchange aspect of it might live, where we can kind of marry the experience with the financial sort of end of it. And this was a natural conversation that we had. We just started kind of building it.
Well, is traditionally, you're alluding to, this has not been a market open to many investors, dropping a lot of cash on individual assets. There certainly is, ways to, leverage and get a loan on these types of things. But talk about, traditionally where this market has been, who the investors have been, and, what kinds of potential returns they have seen historically.
Yeah, so when you think about sort of the asset class as a whole, which I'm sure you're familiar with, classic cars and collector cars in general, especially sort of the top of the top, you're looking at 3%, 4%, and 500% returns, sort of a little bit uncorrelated, but within individual groups over the last decade, let's call it. Within that, you have pockets of sort of untapped gems, the way we look at it, where you have what's happening now in the space with 80s and 90s sort of collector vehicles, stuff that's really low mileage, that's from the European producers, whether it's a Ferrari or a Lamborghini, and are sort of created in very, very small batches that were very rare to begin with. A lot of them were the last of true manual transmissions or really small samplings of what would be something that would evolve and turn into a new model. Those are really highly sought after right now, where you're seeing gains in those spaces trump what were the traditional classic car gains. So when we look at the next generation of collector, the 30-year-old, the 40-year-old, even the 50-year-old now, what they're remembering the nostalgia is that 70s, 80s, and 90s. And that's what we've been really focusing a lot of our attention on in personal investments, but also for the app. So whereas you would normally see, we don't really annualize returns. A lot of them move very independent. In our app, some of the stuff that's done best over this period, over the last 2 years, call it, are things you wouldn't necessarily expect. So things like 90s era Ford Mustangs, which were of a really small sampling, a very specific few, like one that we have was part of a 7-Up promotion for the NCAA that wound up getting pulled last second, but they have all these really unique versions of that vehicle around. So we have one of the best examples. This year, it's up 43% in our app. And then we have stuff that's a little bit more, a little less esoteric, I should say, like Ferrari Testarossas, which to a big group of the core collectors who would go to the Sotheby's and the Goodings to make their purchases were kind of under the radar. They weren't things they cared about. But now we have a really great group of collectors who realize what the potential for a car like, an early model Testarossa, some of the Flying Mirror versions from 85 and 86, which now are starting to sort of come into focus, and they're still in the under $500,000 range, but they show really well, and they're starting to sort of get a little bit of upward trajectory on them. That's the stuff that we care about. I think a lot of collectors are moving into as well now.
So what about who were the collectors before, and who are they typically? Do they tend to be, when you talk about the collectors, obviously they've got to have enough money to do it, but is this an area that's, for just billionaires, or is it also for, high-paid professionals? Who are you seeing buying the stuff traditionally? Who's been the buyers of these things?
Yeah, I think you're pretty much spot on. It's both of those groups. So you have the sort of people who look at these collections as a financial investment, and they get access. That billionaire or like the 100 millionaire is always going to get access to the best possible stuff, and they get it in bulk. So when they're making a purchase, it's not 1 or 2 cars, it's whole collections. And they have it's the Jay Leno's of the world, and they have someone to maintain it, and they have the right storage, it's at the right temperature, the tires get rolled regularly. It's that storage and maintenance component that they don't have to worry about. And that's when you have those 200 and 300 car collections.
Right.
And that's the one phone call before it even goes to auction, they get that stuff.
Right.
The second tier is somebody who maybe has 2 or 3 cars, sometimes even just one. They're a very focused collector. A lot of times they'll focus on a time period or a certain make or model. They'll put $1 million or $2 million to the side, and they're sort of actively looking, and they're always paying attention. And that's like the core auction consumer. So you have somebody that goes to auction where it's a very small group. The books for an RM Sotheby's or a Gooding, for example, might only be, sub 1,000 people that are on their list, kind of people that they want to make sure know about a particular auction. But even then, they have that very specific list of professionals in the space who have an understanding of the space, who are looking for 1 or 2 specific things. When those come across their table, they're making that one direct phone call to that high net worth individual who they know for the last year or so has been looking for that particular car. That's what it's been to this point. And for our user group, it's very much, it's retail. It's the enthusiast who cares. They might know every detail about a car, but in order to get access to even one, even if they had the cash, requires a level of attention and of understanding and of access that has eluded them to this point, us included, and myself and my co-founders are part of that group.
Classic cars in general, it's got to be, I would think it's got to have some correlation to the economy.
To some degree, for sure. But what we've seen is that there's 2 sets. So when things go up and to the right, everything goes up and to the right. And you know how that goes. It's real estate drives a lot of that too.
Yep.
But what we've seen is that when you have stuff that's under the radar, I think the collector group, that group that I talked about, that was the legacy collectors, they move in bunches. So if everybody's on Porsche for a little while, all of them are on Porsche. And then they'll kind of phase out. Porsche will become sort of under the radar a little bit. They'll move to Ferrari, they'll move to 60s era Maserati. And that kind of drives a lot of the movement from a small group. So what we've seen is that the uncorrelated returns are coming in some of these 80s and 90s vehicles that have attention, but from the 5 or 6 or 7 people that were moving the market previously, they weren't getting that attention. They're only getting it from the enthusiasts. Now that the enthusiast comes in, the ability to sort of disrupt that market a little bit and take what was under the radar, things like the idea that, certain cars mimic others, but like a Ferrari F40, someone who looks at that as the $1 million trophy wasn't always looking at the Ferrari Testarossa or the Ferrari 512.
Yeah.
And now you're starting to see the dynamic of the collectors and investors moving out of what were those older Ferraris and the more sort of prestige Ferraris, moving into the lower production number, but newer Ferraris or the new collector models. And that makes something like a Ferrari Testarossa go up 17 or 18% over the course of a year, whereas the S&P might be flat, and other Ferraris from a similar era but with a different dynamic might be flat. And that's kind of what we're starting to see right now.
Let's talk specifically about Rally. Am I pronouncing it right? Is it just rallyroad.com?
Yeah, Rally Road. So we say Rally, it's all the same, but the RD for us was kind of like the Wall Street is its own place, Rally Road is its other place.
Got it. So it's rallyrd.com. So who is it for, and what exactly is it?
That's a perfect question.
Yeah.
So we always look at it that rally is about rallying everyone together, people that really care about something, people that have sort of an interest but have been on the sidelines just watching and letting them get some skin in the game and get some real exposure to the asset class. For us, it's about people very much like us, I think, that have always maintained an interest. They have a lot of information. They want to be educated more about what an individual asset or individual asset class means. And they're mobile first, so that people that come in and do it in an app or do it through the website, but do it in a way where they really want to understand the story and not just the stock ticker. They want to know more about what this asset actually means, what the value chain looks like. They want to see returns over time, but know the story as well. So for us, Rally Road is this app. It's a website and it's an iOS app for Apple, for iPhones, where we let somebody really learn everything about an individual asset and make an investment that they're comfortable with. So we have no minimums. We don't have any sort of restrictions. It's not for accredited investors only. We have some accredited investors. We have some non-accredited investors. It's really people who understand what these things are, why they're meaningful. They understand that they should be treated like art and that we're trying to find best quality examples and allow you to invest in a position that makes you comfortable without intimidating a user or trying to speak down to them. I think Wall Street a lot of times uses a lot of acronyms and they kind of speak to things in a way where it's very much inside baseball. We want this to be for everyone.
Yeah. Okay, so let's talk about it sort of on a nuts and bolts. Where do the cars come from? Are they selling? And what is, the role of Rally Road?
So we're essentially we're managing this process start to finish, and we're trying to kind of stay as far away from your decision making as possible. So I think, go ahead. I'm sorry.
So are you functioning essentially as a broker in this process from a seller? Seller who wants to come on the platform and sell, equity in their car. Is that kind of in a nutshell? Is it?
We're this kind of middle layer that works in a way that there's a lot of people who have access to fantastic vehicles, and those are the people that we keep on network. Those are the relationships that we've established. So a lot of them are private sellers, some are estates, some are even the auction houses where, if you were to sell a car at auction right now, the process to get that done, it takes time, it takes money. It's you're getting charged 25% one way or the other on some side of the transaction or both potentially, and it's kind of out of your hands. We want to make sure it's a thing that the sellers of these assets who maybe have made some money on paper but need some liquidity out of it, and the buyers who really are on the sidelines of these auctions but want to get access can meet in the middle at best possible price.
Right.
So what we wind up doing is sort of getting access to the best possible stuff. We have a huge network of advisors, really well-known names in the space, some of the smartest people in the business with hundreds of years of experience. We have kind of an algorithm that speaks to where value might go because we're investors as a company as well. So up to 10% of every asset we buy at the same price as investors. We can never sell until the car exits either. So we have skin in the game the same way. We believe in these assets. And then the buyers that we're bringing to the platform, we're doing it in a way that shrinks down the proposition to tell the best and quickest possible story and allow you to make that decision if you want to invest or not. So everybody in the app sees the whole sort of process start to finish with no sort of need or requirement to invest. And there's no share minimum. So if you wanted to, it's usually at a meaningful price.
There is the seller, is it, I'm trying to understand how that transaction actually happens. Is it that they are, is your company buying the car ahead of time and then basically, selling a fractional ownership, or is that actual transaction happening in real time as people buy equity in it?
Yeah, so it's both. It's a good question. If we can buy opportunistically, then we'll take money off the books and make that purchase because we're investors as well. So if there's ever a situation where something comes for auction or for sale, or an auction company isn't sure that it's going to sell to their group that they're bringing to the small group, we have the big group. And whereas people that really understand how this process works, if we have, 3 Ferraris that we're looking for specifically and the data suggests they're the right purchase, our user group is asking for it, it's something that we care about, and those come up and they're available, we'll make a purchase and put that on the books because we believe in it. If it's an instance where you sort of, have a great investment, you have a vehicle that's worth $1 million and, you're in a position that you want to sort of get liquidity out of it because it's all on paper, but not go the auction route. We have a situation now where our IPO process, when we bring the car to market for the first time and set the price, they happen quick. So we'll do, around $10,000 a minute in an initial offering. So we can do something like a debt agreement where we have that agreement to purchase over 2 months or 3 months at a very well set price that everybody agrees on. We keep the car where it is. We'll get some pictures of it. We'll put a camera on it and make sure that it's being maintained appropriately, which in almost all cases, these are from collectors, they are. Then we'll run the IPO on our platform. come back with a check for you, and then we'll take possession of the vehicle and put it in our storage facility where it's being maintained and concierge 24 hours a day.
Got it. So talk a little bit about, how far along you are in this business. What kinds of things have you done so far? How long you've been in business? What kind of performance people have seen, that sort of thing.
Yeah, so we've been in business officially around getting close to 3 years now. So we officially launched November of 2017, I believe was our first IPO. The first one we did was, the first set we did was this 1977 Lotus Esprit. And that's a car that, to give you the example of the whole trajectory, over the last 2 years on our platform, we do the IPO. Once the initial offering is done at that price, which in this case was $77,000, there's a 90-day lockup period where no transactions happen. And then we do once every 60 days, 30 to 60 days is a trading window where we reprice the asset, bring a bunch of buyers and sellers together with kind of bid ask and set one clearing price end of day that matches the most possible orders. So that's how we kind of give liquidity to actual investors. Over the last 2.5 years with that vehicle on the platform, it's up around 35%. And that's pretty, I don't want to say standard because we can't obviously promise any returns,
right.
But that's kind of been for cars that we're bringing onto the platform right now. That's pretty indicative of what the trajectory looks like if we're buying well, which in this case we obviously did. And we're always trying to find something that's a little bit under the radar that we feel like our investors would really benefit from hearing the story of a vehicle like that, which is, a Roger Moore James Bond car. And it's something that was the baseline for what became Tesla, and the engineers from Lotus were working on those cars. So it's very, very culturally relevant. It's something that looks and feels great. It was a perfect example and something that lives on our platform still.
One of the things I guess I didn't quite completely address is there is, obviously there's liquidity here, right? I mean, so the idea is that this platform, basically you can buy and sell your equity. It's not just buying a fraction of a car and then just waiting for it to be sold, or can you then turn around and sell it on an open market?
Yeah, so that I should have mentioned it too. So the big differentiator for us, I think, is that we have that liquidity component. The big thing for us was always when we first started this business was, unlocking that liquidity, which for a lot of people is on paper, both for the sellers and for buyers who own a lot of this stuff. So whereas a lot of platforms are doing loans against assets and they were doing things where it was more buy and hold with a very specific redemption period, we wanted to make sure it was something that was accessible and then you could exit. So we're not at a point that's continuous market yet. The goal is to eventually get there. But assets like this, what we've seen is that we have a really responsible marketplace, and that, the bid-ask table, which we publish for everybody when we do these trading windows, allows you to see kind of where the price movement is. And that's a little bit of an indicator of where it's going to go too. So, a big thing for us is always to make sure that liquidity was available.
You mentioned a little bit about the business model, but I just to re-emphasize, because we have a lot of people who are familiar with private placements in the group, but this really isn't a private placement per se. This is effectively brokering. That's kind of what your company does, right? I mean, or are these individually, are these all filed with the SEC?
Yeah, so these are all A+ qualified offerings with the SEC.
So each one of them? Each individual asset?
It's its own LLC. So this isn't a bucket of assets. You get to sort of pick and choose the asset you invest in.
Wait. Say that again. I'm a little unclear with that.
I should have made this. This is a really good point. I should have made this point earlier.
Yeah.
And a really sophisticated investor group, I think, who listens, they'll understand this part of it for sure. That each individual asset is essentially its own series LLC.
Okay.
So we have the parent company that lives on top, of which there's a shelf. On that shelf go all these individual assets. So we have last week was a 1989 Ferrari. That was 1989 Ferrari LLC, essentially, where it's its own company.
Got it.
Owns one asset. That asset has a bank account and has a bunch of investors on the cap table.
But if you're actually filing these, and I'm getting into the weeds, but I know there's just people who know this stuff.
That's interesting.
If you're filing these things individually, I mean, don't you have to go back and refile every time you add a car, and that would take like over a year just to...
Yeah, so in the past it did. So in the beginning, the first one we did took 9 months, and we were kind of the first people to do it. The SEC has gotten comfortable with the way that we process these transactions. We've done it in a way that has become very efficient. So we're at a point now that if you had a car to sell, we have our paperwork templated where what's changing, the risk factors stay the same, a lot of the details around the actual offering stay the same, the details for individual vehicle, because we only take cars that have a very succinct timeline where there's no gaps, that have very specific check marks that we always want to hit before we take them. So we essentially have 90% of that offering statement filled out before we submit. When we get that individual vehicle, we plug in the details, which in a lot of cases is mileage, transmission, things like that. We submit on around a 10 to 15 day turnaround right now. So we're able to do these really efficiently. We're able to do it in a way that's not cost prohibitive and get qualified offerings back in under a month.
Wow. So 10 to 15 days with the SEC.
Now,
unreal.
3 years ago, right? 3 years ago was a 9-month process, So we've gotten really, the way that we've developed a lot of what we do, and we keep a lot of the smart people around us, and we have a great legal team.
Sure.
And Max, our CFO, is just incredible at sort of turning these around quickly now. A lot of it's been created around the efficiency of taking anything public. So we're doing it with cars right now, but as we move into, baseball cards and wine and whiskey and all these other elements, it's a very simple process that we have nailed down at this point.
Got it. So, one of the things that you as a guy who likes cars and a guy who likes whiskey and a guy who likes all these things, you think, well, gosh, part of being a collector and buyer of these things is being able to experience what you actually bought. Is there a way to do that, or is this purely like, okay, well, this is what you got, and you own part of this car and you can look at it in this app, but or is there a way to see, touch, and feel what you own?
Yeah, it's happening. So we always try and make sure there's a way for investors not just to see what they invested in, but to really experience it. So the first iteration of that is we have a retail storefront here in Soho right below our office where anytime there's a marquee offering, we put it in the store. So literally right now in the store is a 1994 Lamborghini Diablo. We have a really great build out around it. We run events in that space. We sell merch there. Also, that drives dividends for investors. So any profit we make in the store, any investor in that car gets a special dividend check with anything we make on top of it. So if we have twice a week now, we're running events for the community, for hedge funds, for a bunch of private equity companies, VCs, and people in our space will run events in our space. They pay for that opportunity. It goes into the bank account for the vehicle, which gets paid as special dividends for the investors. That's the first part of it. The second part is that we have a lot of great people around us now, and that we form these awesome partnerships where we have, hundreds of thousands of people inside the app who love these individual asset classes and want to learn more. So what we do is we try and get the best possible examples into the platform and into our collection so that we can maintain them for future generations, that these asset classes stick around. What we've done is we partner with, like in the wine and whiskey space, we have 3 or 4 great names that we partner with who will do private tastings for our investors and do some really great lunch and learn type stuff. With the cars, we deal with a lot of individual tracks and spaces outside of New York where we can bring a bunch of investors together, let them drive some similar examples and get a real feel for what these time periods are. So layering on that experience is always a really important part for us from the beginning. And now we're starting to do a lot more of it, and we're making sure that investors always have access not just to what they invested in, and they get to see it and understand it and learn more, but also get access to experience it or experience things that are really very similar in the same space.
I guess you'd mentioned sort of briefly that you store the cars. Can you talk a little bit about specifically, where and what measures are taken to make sure that those assets remain unscathed?
Yeah, we have individual locations in a couple of places. The first of which is in Delaware, which is very similar, sort of a free port where art might be kept. It's a secure facility that was purpose-built for this reason. We have 24-hour concierge there. We have camera, which we're starting to surface into the app, which we'll show more of soon. The tires are rolled on a scheduled basis. There's closed track behind that storage location. And then any of those changes go into the statements in the app. So because this is sort of SEC regulated, because everything is purchased and transacted through registered broker-dealers, we're required by law to surface all the information that might change it. In terms of insurance, we have this full fleet insurance where now it tracks last price. So in the event that something were to happen to the vehicle unforeseen, which they're not driven, they're professionally maintained and stored, we shrink down that possibility to near zero. But in an unforeseen event, whether it be a natural disaster or something else, the last price is paid out to all individual investors based on the insurance policies as well. And now we'll be doing more with bringing those cars to all one central location on the East Coast where it will be more of a museum, kind of like a Peterson Museum style setup, which we'll be doing soon.
Cool. Where do we learn more? Like if people are interested and want to talk?
I mean, you can. The press has been really good to us. So Googling Rally Road will bring up some great stuff. But also go to our website, where rallyroad.com or rallyrd.com. Same thing in the App Store. It has all the details about what we do, and we're always open to that conversation. So I've given my phone number out to hundreds of users where I talk to them all the time now. We want to make sure that we're always communicating. And then in New York, we're right in Soho too, on 250 Lafayette Street. Anyone on the East Coast, this is our first location. We're doing a lot more of this. But come in, our staff kind of works as very much like investor relations, where our entire staff and our retail team is trained to really understand everything about these vehicles, be able to sort of learn and teach the same way that they would if you're walking into a Peterson museum.
Well, I guess one last question I should ask Rob is that if somebody is listening and is saying, well, gosh, I like the fractional thing, but I really I'd like to buy, I'd like to know where I can, actually source, Lamborghini Diablo or something like that I'm going to take down myself. Do you do any of that, or do you know?
Yeah, absolutely. So we've had a couple of exits off the platform. So the 2 cars that sold over the last 6 months, one was a 2000s era really special Mustang. Another was a 2006 Ferrari F430, the last gated manual Ferrari. And those sold for a 17 and a 19% gain respectively. So we always want to sort of get the best possible version so that when it's time for someone to come buy it, instead of having to go through the auction house, they can come straight to us. And a lot of times we'll have best examples. So we treat it's in the app right now, and they can always contact us as well for anything in our inventory. But it's kind of like a hostile takeover. So you have to buy all shares. We bring that potential price to the shareholders once qualified. If we get that sort of majority decision, we go to our advisory board who makes the sale and delivers the vehicle directly to that buyer.
Cool. Well, this is a super cool business. Kind of jealous.
Likewise, man. I wish I had the setup like you do in the house right now. I'm a little bit jealous of your setup and the life as well, man.
I don't know. I'd take the Ferraris over, my headset and Mike.
All right, fam, I'm definitely spoiled in that respect. I'll give you that.
Yeah. Well, thanks again for being on the show, man.
Likewise, really appreciate it.
We'll be right back. Welcome back to the show, everyone. Hopefully you enjoyed that. I think it's really neat. What I find interesting about Rally Road and other businesses like it, we had this a few weeks ago. We had another business on where it was about fractional interest and ownership in fine art. What I find interesting about these kinds of businesses is that essentially it's using fintech to democratize investments that were really previously only available to the ultra wealthy. Now, I think one additional benefit of that is that it could actually drive up the prices of these assets even more. If you think about it, if you open up these assets that were otherwise just there for people who could, pull $500,000, $1 million, or, $20 million at a time, that marketplace is not very big. The market, if you think about it in terms of like a market cap, right? It's not very big. There's just not that many participants in that market. But if you open it up to rare art to a rare car marketplace, all up to accredited investors, like country club investors like us. That's what they call us, by the way. That's a huge injection of capital into these previously hidden marketplaces. So, and if that hypothesis is true, I would think that now's the time to get in. But anyway, it's if nothing else, it's nice to know these opportunities are out there. They're really interesting. And at the very least, I highly suggest downloading the app and checking it out. It's really cool. Anyway, before we go, one last request I have from you, which is, and I don't ask you for this very often, but when you get a chance, can you go to wealthformula.com and click on the 5-star review button at the top? It'll take you to the iTunes page. And if you think the show deserves it, give me a 5-star review, write a review, whatever. The more subscribers and reviews that we get on iTunes, the more leverage we have in getting the best guests and attracting more listeners. So that's how we continue to keep the quality. We have some really, really good guests coming up in the next month or so. And it's for this reason, is because we've got a good reputation. And that's all, frankly, from the statistics. So that makes everyone's experience, mine and yours alike, better. So if you have not done so, make sure you do your part. Go to wealthformula.com. At the top of the page, you'll see where it says, give us a 5-star review. Click it, and it'll guide you through the process. And tell your friends, too. Don't keep this stuff to yourself. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.